Closer look at economies and markets are our friends Danielle Shay of Simpler Trading and conservative commentator Steve Malzberg. Welcome, guys. Thanks for being with us again. Steve, let's start with you in the U.S. You know, it's been 2 years and 1 day since Donald Trump took over what was already a growing economy, and it really continued going to greater heights. But now many are questioning if it will or can continue. Steve, what's your take?
Well, one day you and I will sit down, we'll have a great debate over how effective the Obama recovery was, but that's beside the point. Yeah, look, I mean, GDP in the second quarter of 2018 was 4.2%, and in the third quarter, as you well know, it went down to 3.4%. Where's it going to be come the fourth quarter report, you know, with the government shutdown and everything else? However, having said that, that's still a good number, and so are the unemployment numbers, as you know. Record low unemployment, the lowest since 1960, when you talk about 69, when you talk about 3.7%. Every ethnic group, blacks, Hispanics, Asian Americans, lowest in history were reached as well. 5 million jobs. You also have us now producing more oil than ever before. We're the largest producer of crude oil in the world, thanks to Donald Trump and getting rid of, regulations that weren't conducive to that. Speaking of regulations, he also got rid of, got us out of TPP. He got us out of NAFTA, renegotiated NAFTA. He got us out of some of Dodd-Frank signed legislation, making it easier on community banks. So things are firing pretty good. Of course, China and the government shutdown and the Mueller report are all the impediments on the road ahead. We'll see where it leads.
Yeah, that's a good synopsis. Biased, I think, in some parts there, but you got some of the statistics. but I get you, Steve. And look, I agree. I mean, a lot of those things were absolutely good, and the president may have helped, but he certainly didn't do any harm. The one caveat might be on the trade stuff, and maybe we'll talk about that a little bit more. But the book's still unwritten on that, right? And Danielle, last time you were here, I think you said that you could foresee another rally coming. My question to you is, one, what would be the circumstances which would sort of set the table for such a rally? And two, are we talking about a short-lived rally or something that might exist for several months?
So what I'm looking for is honestly, it's going to come back to this earnings season. So last week, the banks started reporting earnings. It was very strong, very positive overall, which sent stocks skyrocketing higher. This week and next week especially are going to be critical in the market because when we have our key companies coming out and reporting earnings, if those earnings reports are going to remain strong, I do think that that can send the market skyrocketing higher because of the amount of fear and because of the amount of volatility that we saw throughout November and December. But that doesn't necessarily mean that it's going to be a longer-term rally. I mean, what I think we're looking at is an incredibly volatile market, and especially if you look at the price action that happened in November and December, this was very emotional-based, algo-based trading, and I think that we have to understand that the market environment is completely different now than it was really back in 2008, and while we can see incredible spikes based on earnings season, we can also see sell-offs that come very rapidly due to this algo-based trading.
And let me ask you, Danielle, because, you know, I've said that I think it's the Q1 earnings that will really be telltale. We've seen, you know, the airlines were down. We talked about a couple of these, some of the retailers. Steve, we spoke about that. But Q1 will be after, you know, the trade war is really sort of more full-fledged. And boy, if this shutdown Steve referred to earlier continues, you know, people are saying there could be zero growth. So it really could be a big downer if things go south. Right now it seems teetering, right? Right, Danielle?
Yes, I think it's absolutely teetering. And, you know, I think that a lot of the effects that we're going to see from the tariff wars, from China's economic slowdown, and especially from the government shutdown, I think that people aren't really realizing how impactful this is to the overall economy. So, for example, last week, people were looking at the stock market saying, hey, the stock market's rallying, but the government's in a shutdown. It must not be a big deal. Well, it is, in fact, a big deal. It just may not hit for a while. You have people not getting paid. People cannot pay for their mortgages. And you have a situation in this economy right now where we have the highest level of consumer debt that we have seen. We have student loans, we have housing loans, we have car loans. And, you know, that bubble is going to burst eventually. It might not be right now, but potentially later on this year or next year, it can absolutely happen.
Yeah, well, let's hope it doesn't. Hey, Steve, I want to shift before we run out of time to that IMF report I talked about, global economies, reducing the global growth projections from 3.9% to 3.5%. What do you make of that? And there's also that news about China having their worst GDP, although their worst is still pretty good since 1990. What do you make of all that?
Well, 3.5 isn't terrible. Their projection for 2020 is 3.6. But as you pointed out, it's the second time they're revised down recently. The last one was in October, and they've indicated that it's for much of the same reasons that a continuation of the circumstances that had them revised down before. China is one of them, and we'll get to that in a second. Also, German car manufacturers are having trouble because of new fuel standards. Italy not buying as many. You have Turkey with an economy that's worse than was projected originally. And China, their GDP is projected to be down to 6.2 this year. So the downward trend is going to continue. People are losing their jobs in China. Unemployment is creeping up in every sector, from tech to manufacturing, you name it. And, of course, you also have the fact that Chinese goods aren't in as big a demand around the world because of the global downturn. So China is a mess right now, which makes it imperative, I think, even more so than ever before. And I think President Xi realizes, hey, we need to deal with the U.S., and hopefully that will happen and solve the problems, a lot of problems at once.
I want to talk more about that, but we're out of time. And Danielle, I also want to bring you back whenever you're willing to be with us again. You've been so gracious with your time to talk about global markets and how we think they're going to go forward in 2019. Hopefully we can do that in the next few days if your schedule allows. Danielle Shay and Steve Malzberg, thank you both for your time. Sure appreciate it, guys.
Thanks,
Thank
Bart.
you.